Good afternoon, everyone. It's 10 to 3 here in the UK on Tuesday, the 22nd of September. I'm looking at VectorVest USA, and we're just into the trading day, 20 minutes. Seriously bad day for stock markets on Monday, and the gold market followed it down. So we have a situation where the traffic light on the front page of VectorVest says categorically does not advocate buying stocks at this time, and that's great advice, folks. I'll talk about that in a second. So all of the measures of the trend on the VectorVest Composite USA are down, although we've had a little bit of a bounce this morning, and the market giving that bounce back 20 minutes into the day. The S&P is up as I speak 5.6, 5.55, 4.8, so giving that up ticks over last night's close. The advance is slightly above that of the declines, but the buy-sell number says it all, folks, where there's in fact the buy-sell ratio, the number of shares on the buy divided by the number of shares in the sell, has got a ratio of 0.3. There's 590 companies in the US out of the 8,000 odd that we follow on a buy, and a whopping 2,000 odd on a sell. So the breadth of the market pretty poor indeed. So not a day to be adventurous. So let's just have a look. I've got it open, I think, at the VectorVest Composite. This is an equally weighted indicator of all of the shares that we follow in the American market, and I've marked the longest term measure of the trend. These are called confirmed calls, and as you can see, we got a confirmed call down a couple of days ago. This is the market timing indicator, a momentum indicator, which is moving into an oversold situation. Still got a little way to go before it become mega oversold. The MTI needs to get down to about 0.65 or less to become mega oversold. And we can see this breadth divergence that was running on for many months. I did a video some weeks ago that this time will not be different. It took a long time for that the canary, the buy-sell ratio, to actually kick in, but nevertheless it kicked in, and we saw what happened yesterday. So trends are down. We've got a little bit of a bounce. There's very important support levels, and VectorVest does that automatically. If I click on support and resistance, it draws in the major support and resistance levels over the last year or so. And as you can see, a major level coming in exactly where we're at that old top, and the next level down also drawn in for us automatically. So we could see a little bit of a bounce here today, but certainly for me in the main it's too early to do anything. So the medium term measure, which is called the DEW of the market, in fact is also down. Gave a signal a couple of days earlier than the confirmed call, and that's the signal that I've been following in the US market. Bought into shares on the 6th of April, and I cleared out the whole darn lot when that red signal came Friday before last, and I reported that to anybody who would listen. So if we have a look now at my dear old favorite, the S&P, that's the S&P 500. It in fact reversed very nicely off the lows last night, and it gapped up this morning, but as I've said a second ago, it's busy giving that back at the moment. The Fibonacci levels invariably kick in, and we're still way off this 3200 level, which is a confluence of that last old top. So there's still a high probability that we can come back here to 3200 before a bottom, at least a short-term bottom, is in. So as I said, I'll say it again, only the most adventurous, largely speculative gambling types would be trying to pick a bottom here today. Still too early. And I've got another chart of a share that looked good last night, which is Apple. And Apple, they say, whichever way the Apple goes, the market goes. Again, a very useful candle on Apple yesterday. That candle was known by floor traders, folks, as a gap and snap. It gapped down and then reversed, and the signal to buy in would be after it breaks up through the lows. That's a really good trade. I think in candle terminology, it's called a piercing line. On the floor in Chicago, it was called a gap and snap forever. A really good reason why it stopped here, folks, is that if you draw a trend line, an obvious trend line, which these things have got a lot of power, and you draw it like so, it didn't stop there by magic. It stopped there because that's where the orders were, and it bounced from there. So that's a really good, strong level on the S&P. I still think that there is a possibility, David, that we can get back to that 78% retracement, which is at around 100. So just let it settle in here. As I say, speculative types could be tempted to try and buy in there, but at VectorVest, here's what we do, folks. We look for shares with great fundamentals, and certainly Apple's got those. We look for shares that are in the throes of a strong trend upwards, and certainly Apple has got that. And I'll put on my 21 and the 55, and you can see the 21 and the 55. 21's above the 55, moving up quite strongly. And the third thing, folks, is the general market must be coming to the party. It is my belief that the general market is 70% of the exercise. So in Apple, I think we could tick 2 of the boxes, but the third box, which I think is 70% of the exercise, is not coming to the party. And in fact, as the S&P has given up and the composite has given up a bit of ground, this pointer now is right down on its knees. VectorVest does not advocate buying stocks at this time. When you simply follow the rules, you get very lucky indeed. So by ticking the boxes, the minimum measure of the trend from the general market would be that the primary wave turns up and the color guard tells us that it's safe to buy stocks, and that has not come to the party as yet. So if you're playing the game according to my rule book that I teach in the swing trading courses, I would suggest that you wait and let the dust settle before doing anything. Nevertheless, I am getting old and conservative, so I hope that you found this useful. I think that I've got a watch list of shares that I'm looking at. I was looking at Beyond Meat. A friend of mine emailed me a second ago, should she buy Beyond Meat? I had a position in RGI and apps. They were both profitable positions last week as the short-term trend turned up, but I got out of both of them yesterday as the market turned down savagely. This is a big day for Tesla. I'm sure you've all read about what's happening in Tesla today, and Tesla up $7. Nvidia up very nicely indeed. Square up very nicely indeed. I like the look of pins as well, off a tad, nothing worth. There'll be great opportunity in these stocks, in my humble opinion, folks, when a short-term bottom comes in, and when that short-term bottom is confirmed by at least the short-term measure of the trend, the primary wave turning up, and then there'll be plenty of time to make some money. I think my stomach tells me there's a high probability of another run in this market into the American election. However, I will not be trading my stomach. I will be trading what VectorVest tells me to do. And if you follow the rules, you get very, very lucky indeed. I hope you found this useful. Thank you.